Hi, this is Michael Regan with the Regan Team Home Loan Group, and welcome to this week's Real Estate Roundup. First, we're going to start with the Case Shiller Home Price Index for February, and it showed that nationally prices were up 0.3 month over month, and they're up 0.7 year over year. And so, while this isn't staggering appreciation, it's not depreciation, and it also is very sustainable. So, it's one of those things, again, the longer you wait to buy a house, the more expensive it's going to get. And then into new home construction. So this gives us a view of what's coming down the pipeline in terms of how many new units we're going to have, because we need to have somewhere between 1.5 and 2 million units created a year just to keep up with normal population growth. So permits were down 10.8% month over month, and they're down 7.4% year over year. So this is going to be really good down the line in terms of we're not going to have enough houses. So you're going to have really a shortage of inventory, and that's going to be really supportive of home prices. So definitely down the pipeline, looking good to be a homeowner and not so much a renter. Now starts though are up. Now remember, this could be done, their permits could be a year old or more. It does take a long time to build a house, but what we're seeing down the pipeline is not great. But what we do have right now is starts are up 10.8% month over month, 10.8% year over year, which is great for that. Construction, though, is down 9.8% year over year and flat for the month. And again, not even keeping up with population demand, what we're seeing in any of these numbers. And completions down 12.8% per year. So again, at the end of the day, home prices are going to continue to appreciate because we just aren't keeping up with population growth. Now, something that shows you why homeownership is so important, because a lot of people think, hey, I can be a renter, I can put money into the stock market. But realistically, almost 50% of people don't really participate in the stock market or any kind of equity, and they're just getting poorer and poorer as our money is being debased. So, what makes people be in the top 1%, 2%, 5%, etc., is really on average 2/3 of someone's net wealth is from home equity. So, if you see the top 50% of net worth in the entire country, people have about $600,000. Top 10%, 900,000, top 5%, 1.2 million, top 2%, 2.7 million, and the top 1% is 11.6 million. So this just shows you, again, especially for our area, most people could get easily into the top 5% of net worth just by owning a home. And again, that is why it's so critical to buy a home, not continue to rent, because it's really forced savings, forced built of net worth is owning a home. And again, that is why it's so critical, because most people, 2/3 of their net worth is in their home. And to get in some more details about our money supply and what's going on right now is this is what happens when you have a big increase in money supply. So lately, we've had a huge increase of basically printing money. And so whenever that happens, whenever you have an increase or you're printing more money than wages are keeping up with, what happens is people continue to feel poor and poorer because things get more expensive. And the reason they're more expensive is not necessarily because they're in shortage, it's because there's so much more money out there chasing the same amount of things. So things get more expensive because there is simple economics, supply and demand. And so what happened is that we've been printing a lot of money lately, especially this year. And what that's going to do is that's going to make people feel poor and poor. And especially if you don't own any assets. So if you don't own a real estate, if you don't own stocks, any appreciating asset, it's actually any money sitting in the bank, a CD, or if you have no assets, you literally are getting poorer and poorer every single day because the money supply is increasing, but you don't have anything to go against that inflation. And when you increase the money supply, that is also very inflationary. So there's a lot of things going on right now. And whenever you have almost $40 trillion worth of debt, that is why we're seeing more of a K-shaped economy. Those with assets, those without. And that's why we need to start kids and have people understand that to increase, need to know the rules of the game to win. And to win, you need to have appreciating assets. That means you need to be in the market in some way, shape, or form, and you need to own property, real estate. And the best thing is to buy your own house and to start as early as you can, because as we see the house prices go up, it's not necessarily the price of the house that's going up, it's that your money is just worth less. And then to what the market did today, we were down 38 basis points in the Fannie Mae 30-year fix, and you'll see the chart. Red is bad for rates, green is good. So we were starting to get up, rates were getting better, and all of a sudden a lot of red. And the reason why we had such a big downturn today is we had the Fed met, and a lot of the commentary that came out of the Fed was not necessarily rosy. We understand that inflation is going to pick up because of the war in Iran. Oil prices shooting up makes everything more expensive. And so a lot of Fed members dissented about doing nothing to the short-term interest rates because they didn't want the language in there saying essentially they want to be accommodative, so that they want to help the economy. Essentially, there's some more Fed members because of the increased inflation, because of oil prices, that want to be more restrictive in our monetary policy. And so that's not good for bonds. I mean, whenever they hear the Fed is worried about inflation, then that's not going to be a good thing. So that's why rates went up considerably today. Now, they're still better than they were a couple weeks ago or a month ago, essentially. That being said, any of the rates you see, they got worse today because of those Fed minutes. And that's it for this week's Real Estate Roundup. Don't forget, we specialize in cash flow loans for self employed business owners and investors and reverse mortgages. Have a great week.